All right, hi guys, welcome to another edition of the Trading Titans podcast. Again, I'm going to be looking at today recognizing the day frame. So that's some of the stuff we're going to talk about. I know for a lot of guys, it's we're looking, but we're not necessarily seeing. And I think this is like a very important aspect when you trade. It's not just look at the charts, but it's actually to see what's of relevance. So ultimately, if I just defer to today's quote, we should always be asking ourselves, is this something that is or is not in my control? Right? So the truth of the matter is that we got to start thinking about the things that we can control. And we generally can't control market price action. So we got to get a lot of the ideas out of our head that the market may well do what we want and focus on the things we can recognize and that give us a higher probability to act on. And I think this is a pretty crucial element when we're thinking about day trading or we're thinking about anything along those lines. We have to think more about the things that we can do something about. And really, the only power we have is to recognize change, right? So markets are generally about recognizing change. And if we can't recognize change, it is going to be quite challenging for us as traders because we're not really focused on the fact that the market is changing in front of us. We're more focused on the fact that we want the market to do what we want it to do, and we go into a mode of like freeze and shut down when it actually doesn't do that. So we just have to accept as a matter of principle that the market is not going to do what we expect it to do. So ultimately, I'm going to press on to recognizing the day frame, and we're going to look at a few aspects. Okay, I wanted to bring in focus at this point a recording that I did, which I thought was really important actually, because I hadn't really thought about this one before, right? So I kind of wanted to focus on what actually happened in the day, so I can actually bring it to traders in more real time. It's very easy to talk about a chart that's complete, but by doing a recording, I can get a really good perspective of what is actually developing, and then I can sort of bring that to the forefront. Right, so let's take a look and see what's going on here right now. Right, so what I'm doing at this stage is I'm just kind of moving the pointer, so it wasn't actually running. So I'm just going to start again. So what I'm doing is moving the pointer so we can see how the TPO traded through the day, right, up until a certain point. Now, before I actually start doing that, I'm just going to pause this 1 second. And I want you to look at the top here. So here we have an L print. So we've got an initiating seller. So this market was largely kept down. There are other factors that we can note, but I can't highlight anything on this because it's a recording. So but this, we had an initiating seller right here, and we had a response, an initiating buyer here. Now, it's a question of priority. Now, one of the things that a trader always has to ask themselves is the market too short or is it too long? And over what time is it too short or too long? Right, so there are a couple of questions that you want to bring to the forefront. And once you can identify if the market is too short or too long, then you know the appropriate action to take. Now, already we'd found ourselves in a scenario wherein we had an initiating seller who's significantly pressured the market the prior day. So it's a question of whether that seller can hold or they're not going to hold. So as we come into the next day, we have a slightly bearish sentiment because we've had an appreciation for what has happened the prior day, and what we now have to assess is the strength of the initiating buyer. So as I forward this tape, I'm going to show you exactly some of the decisions that we had to make in the day trading client room. So as I fast forward, you can see that in K period, the market was relatively running quite stable, right? So we had a bit of a pickup, and to most traders, it would have looked like the buyers were kind of trying to get involved, right? So here's the crucial aspect. As we waited through L period, which is around about 9 to 10 type session, right? You can see that the L period print started to fight back quite aggressively, and you can actually see based on the way the volume was developing, right, that there was an anomaly taking place. And for those of you not familiar with anomalies, again, it's not something I want to shed light on the podcast because we're dealing with market profile here specifically. So if you want to get a better understanding of anomalies and how that works, then you should check out a client room. That would be the best approach. And don't worry, guys, I'll always send you to the client room. It is a much better way to kind of get to grips with what I'm doing, especially when it comes to anomalies and calling those trades. All right, so let's move this slide again so you can actually see now. At this point, as a trader, from a trader's perspective, we should be preparing to execute on the short side. Right, reason being is that we can see that the buyers that had entered the market in K period are now under considerable strain. And what normally happens in these scenarios is you get short-term liquidation, right? And if you get short-term liquidation, this market is probably going to crush all the way to the bottom, right? So we keep going, right? So as the L print develops, as you can see, it wasn't necessarily a smooth ride, right? It has a bit of bouncing around, and then we finally make that point there. So around about 141.03, you should be executing a short position. Now you have a limit, and for me the limit is 140.50, so somewhere round about that value low. Okay, that's where I expect the volatility to go. Remember, this market is incredibly short, so as we push lower we start to break, right? So you now start to see, but as you can see, it's not a smooth ride, right? So the market takes a bit of pressure, comes back up again on the break, right, as those stop losses get triggered, right? And as you can see, it's almost looking like, oh my god, at this stage, right? And as you can see, it's almost like the market is going to turn around, right? But it doesn't, right? And this is some of the shocks that take traders out of the market, because they don't have a robust concept, so they don't have a robust principle, so they're not sure at that point what's happening, and they lose confidence, and they either get out of the trade or their stops are too tight and it gets triggered. Right, but as you can see, we keep going, right? So I'm just gonna fast forward the clock now, and even though we've violated that K period low, we're still not quite down yet, right? So for most traders now, it's all panic, right? At this stage, the market's going back up. Some people are getting into long positions now. They're saying that I'm wrong, it's not right, I'm gonna take the opposite side of the trade, and a lot of madness is going on, and that's what causes that extra volatility here. Is as those stops get triggered, we see a lot of people trying to buy against that, and a lot of people also trying to sell against that. Right, so we continue in that direction, and as I fast forward the clock, you can see that as we sort of press into that 12 o'clock framework, the market is completely down, completely taken out. Right, and we keep pressing right through the day. So as you can see now, we're rapidly approaching that 140.40 level, right, which is that absolute value low. So you can see that I shifted the target bar, right? So we're kind of pressing in there, right? Again, remember, it's never a smooth ride, right? So you can see there buyers intervening briefly, right? And as we keep pressing forward, we're now forming a bracket, right? And like I said, it's never a smooth ride, and as we develop, you can actually see now that the market is relatively stalling, there's no buying interest, it's a bit of a struggle, right? And at some point, the market starts to pull back. So also, this is a cause for panic. I personally speaking, on seeing this move, would say that it might be a good idea to cover your shorts, but then you have to have confidence in what's coming next. So again, we start to take a lot of pressure in P period. Sellers are intervening, right? So again, it's never a smooth ride, right? So again, and then, you know, we see that change there. And rightfully speaking, we start to see Q period now start to push to the upside. So you know that the buyers are trying to get involved. And then pretty much we start getting a lot of pressure now in Q period. Right. So as you can see, the sellers are quite dominant. So no matter how hard we try and make our way back into value, the sellers are attacking the trade below the base of value. And that's a sign of continuation. And just to kind of sort of end this particular slide, because at some point we stop recording, but by our period, the market is completely taken out again, right? So you can see that attack there just below the base of value, and then we end up breaking. So this is one of the crucial things that you're going to see, and I can just tell you how this market ended was with it crushing just under the 140.40 handle before rebounding for about 50 pips roughly after it hit that handle. So again, it's just so you're aware of some of the challenges that you're going to find when you trade, that sometimes the call is not as clean as you want it to be, but if you hold on, you'll be able to take some profits at the end of the day. And in reality, it's about recognizing what was happening within that crucial period. Now, bearing in mind, anyone trying to get short around about end period would have most likely stopped themselves out or just got out of the trade. It was a very difficult point to trade from. But you can see that the decision had to be made in L period. Right? Had you not made the decision in L period, you would have walked away with a worse price. And this is the primary reason why a lot of people get affected with trading. It's making those decisions. Now, there were a myriad of other reasons why you would want to take the short position, but I just zeroed in there on the obvious one for us in the client room that we all discussed, and that was the taken out of the K period low. So making that decision when it mattered or when it counted was pretty crucial, right? So just pay attention to that, all right? So it's not about what you want it to do. It's about what it's doing now in real time, and you got to focus on that. Any questions, guys, just let me know. I hope you guys have an awesome rest of the week. And again, for this edition, hopefully I speak to you guys all next week.